The U.S. Federal Reserve kept its interest rates steady once again as inflation persists. With the decision, South Korea's economic and finance leaders are likely to remain more cautious about interest rate cuts. Our economics correspondent Lee Soo-jin reports.
U.S. Federal Reserve officials kept rates unchanged for the fifth consecutive time on Wednesday, following the second two-day Federal Open Market Committee meeting this year. With this latest move, the benchmark interest rates in the U.S. continue to stand in the range of 5.25% to 5.5%. And the key interest rate gap between South Korea and the U.S. remains at 2 percentage points, as the Bank of Korea also froze its rates for the ninth consecutive meeting in February. The U.S. Fed's decision to once again freeze interest rates, along with South Korea's consumer prices once again entering 3% territory last month, is increasing the likelihood of the Bank of Korea also keeping rates steady at the current rate of 3.5% at next month's decision rate meeting. There has been much speculation about when the Fed will begin cutting interest rates, with observers forecasting that rate cuts will come in the second half of the year. Following this latest meeting, policymakers forecast that 3 rate cuts will come by the end of the year, consistent with earlier forecasts and supported by the Fed chairman's comments.
We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
A fresh set of quarterly U.S. economic estimates has also been released, showing an elevated projection for inflation due to slower than expected progress towards the Fed's 2% target. The forecast says the personal consumption expenditures price index, excluding food and energy, will rise at a rate of 2.6% by the end of the year, compared to the 2.4% projection issued in December. And during Thursday's emergency macroeconomic meeting in South Korea, attended by the country's key economic leaders to discuss the potential impact of the U.S. Fed's rate freeze, Finance Minister Choi Sang-mok said that there is growing uncertainty about the timing of rate cuts in other countries, especially with the Bank of Japan's decision earlier this week to raise interest rates for the first time in 17 years. Lee Soo-jin, Arirang News.